And good afternoon. Welcome into Market Talk for this final day of February, Monday, February 28th. Thanks for joining us, making us part of your day. I'm your host, Jesse Allen. Find us online. MarketTalkAg.com is our website. You can find all the latest social media links there, news of agriculture, all of our streaming sources, and much more. It's all online. MarketTalkAg.com. Well, another day of volatility in the markets, this time sharply higher in the grain and energy trade with livestock under pressure. A lot of this tied, of course, to Russia, Ukraine. We got plenty to discuss. Let's talk about it. Let's bring in our good friend John Heinberg with Total Farm Marketing joining us here this afternoon. John, good afternoon. We were chatting a little bit before we went on air. It's almost an easy show today in a sense because grains are just sharply higher and pretty much we could chalk it up to Russia, Ukraine for the most part. What another wild session we had today.
Yeah, things are just really moving all over the place. It's hard to predict. It's hard to just kind of gauge where things are going to be. We walked into Sunday night trade. I'm just kind of trying to get a feel where things could be. Just talking to a couple customers last night as well. And, next thing you know, boom, we opened up limit higher in wheat and corn pushing limit. And I'm just kind of like, all right, didn't quite see that one coming to that level. But it's just, again, really hard to gauge. We had a lot of things at the end of the week outside the headline pressure. We also had end of the month trade with the February coming to a close today. You also had first notice day. I think that was a big chunk of Friday's action too. Is just those longs having to get out of the March contracts and the grains and maybe getting a little bit hung out to dry there with the way the market moved. So again, a lot of moving pieces. And the thing is, we don't know where it's going to be 5 minutes from now, nonetheless, 5 hours from now. So again, as a producer, you just kind of got to sit back, stay disciplined, try not to guess which way things are going to go because you can't. You can, like I said, one headline and boom, we could be flipped the other way tomorrow morning.
Very, very good point. It's all headline driven right now, and the computers take the momentum and shoot us whatever way the headlines are telling us to go. And I think about today's close, corn up limit in those front month contracts, March expanded limits there. That's going into delivery. I mean, markets like that, wheat market up sharply, and I would think most of corn and wheat probably tied to Russia, Ukraine. Would you agree with that? With the exception being the soy market, maybe a few other fundamentals there.
Yeah, realistically, again, the wheat and corn is all tied to what's happening in that with the Ukraine situation. Soybeans are still a little bit fundamentally driven. We know we've got an issue in South America. We know we've seen a kick up in demand. Another sale this morning of old and new crop beans that continue to add to that pile. That's still encouraging. In fact, realistically, those beans came on sale with this pullback here last week. They were locking beans in consecutively through that window, and we were trading well under those target points. So that just told me that we were probably going to see some additional demand support. So to me, realistically, I think when we're looking at this market, you go look at Thursday, you go look at Friday, those are the extremes in terms of the top side and the bottom side, barring news that is breaking us back down to the bottom side or outside of that range. I have a feeling right now, maybe we're just going to get ourselves into a sideways consolidation pattern, knowing we've got this going on in terms of the Ukraine. And, it's just going to be some wild swings and eventually maybe get ourselves into a tightening type of a range until we get those acre numbers here towards the end of March.
Yeah, and you think about those acre numbers coming up. I also think about next week's WASDE report. As it appears, this situation is not going to end anytime soon with Russia, Ukraine. So I wonder, what do we see volatility wise with a WASDE next week on top of all the issues going on in the Black Sea right now?
Again, watch what those demand numbers are. That's still going to be the biggest thing. And, in terms of what's the trajectory of the crop, are we still getting a tighter supply picture? Do we see some adjustments on that soybean demand and tighten up the picture a little bit more there as well? I think that could be an adjustment we do see, given the way China has stepped in or other importers have stepped in here on old and new crop beans for next year. Again, there's a little demand drive underneath this market. Then too today for beans, a big factor was the move in oil, which carried over into soybean oil. And that's helped push that market higher as well. So, what happens with crude oil could be a big piece. We're still finishing $3-4 off, higher today, but trading again well off that low. So maybe that chart's even getting a little bit tired. But to me, there's a lot of little things that are coming to play that are in this market feels like I said, we're maybe going to build ourselves a big wedge pattern up here with wide swings, tightening it up, and a lot of these commodity sectors. And then maybe, let's see what happens too with the equity market. And obviously, seeing some pressure today. We got the Fed meeting coming up. What happens there? Just so much stuff going on right now. It's almost a little bit nerve wracking as you try to figure out what you need. Again, just look at the numbers, see what's out there for yourself, ask a way to build protection to protect those numbers, and just take advantage of it because nobody's going to hit this perfectly. If they do, they're just a lot better at it than I would be in that regard. And I'd say good luck down the road with that. So, because those things can change so fast.
I've adopted the term, I think, don't be a dummy when it comes to your marketing right now. I know that's maybe an oversimplified statement, but just just be smart about what you have going on right now. There's so many tools at your disposal as you're trading these markets. Obviously, a lot of volatility, wide swings. You're gonna put an out of the money call out there, way out there, just because I mean, there's so many different things and options that you can take, routes that you could take. It pretty much just comes back to don't be a dummy. Be smart about what you're doing, John.
And the real tell of this thing is going to be the cash market. Okay. The futures are traded by computers, they're traded by speculators. They're in this thing trying to pull a buck out of this thing here and there. Let's see what the cash market is doing. What is your basis telling you? If it stays tight and the end users are trying to continue to secure bushels here, that just tells us we have a tight supply in front of us and all these wild swings will eventually level out again. Like, very true to what you said. Just stay disciplined to what you're targeting on. Focus on the cash market. If we're making some sales, stay with those targets. I said it on Thursday. Right now, base hits and doubles are going to be just as good as home runs in this thing. You can hit a home run once in a while, but we might strike out 4 or 5 times. So in that regard, make some things that are good strategic plays and just stay disciplined. What's the cash market telling you? What's your local basis telling you? And use that as your guide and, kind of maybe turn your eyes away from the futures market a little bit as we try to figure out where we want to be. But again, to me, volatility eventually starts winding down, start building a bit of a sideways range. Heck, even with limit up today, it was an inside day in corn. So all we are technically was higher. No new high, no new low. We just traded within Friday's range. So that really doesn't give us much of an indication overall.
John, weekly export inspections pretty much looked like they came in as we expected. I know wheat shipments to date on pace to hit USDA's target. Core beans maybe a little off pace. What's your thoughts with those export inspection numbers today?
Yeah, pretty much in line. It's nice to see the wheat numbers finally pick up, maybe validating the thought that we could see some more demand, due to some of the other issues that we've had prior to this. Like see those corn shipments and bean shipments, but now corn shipments are going to start picking up. We're getting past, 1st of March here. This is typically the window. Beans start slowing down and corn starts becoming the driver. So anything like that on a bean number actually is kind of encouraging, saying that, hey, maybe we got a little longer window on the export side like we did last year. And that was a big factor for some of the springtime prices was the fact that those Brazilian beans weren't available. And this year, because of the weather, they are behind schedule again or not there in terms of supplies. And that gives us a little longer window for the US side. So, export inspections, really keeping an eye on sales. We've seen a nice uptick in old crop sales here for beans. Again, some of those unknown destination sales, typically we start closing those out this time of year. And now we've had a surge in them. Just tells us that this market's going to be looking for beans. And I love the numbers we're seeing for 2022-23 already for soybeans. Just tells us that, again, this market thinks at $14 plus that there's still a value longer term. So somebody knows something's going on out there and they want to lock those supplies in for next fall.
Real briefly, you mentioned the financial markets and the energy markets, and it feels like today is a lot of just reaction to all the sanctions put in place on Russia by the West. You mentioned, keeping an eye on this, and it still feels like the market's maybe digesting sanctions, and that's why we saw some of that money flow out into food and fuel today. What do you think there?
That's a definite possibility. You go look at that turnaround from Thursday into Friday in the equity markets, obviously mirroring what happened in the opposite side of the grain markets. Today consolidation near the top of the range. Kind of hard to believe I'm saying consolidation when you're down 450 points on the equity futures here. Plus, but again, still trading at the top of the range and holding underneath support. Market's got a direction. It may want to go one way or another. again, still digesting a lot of the news headlines out there. What's going to be the impact on the financial markets overall? Don't forget, we got the Fed meeting coming up here right around the corner as well. I know that's got everybody wondering what they're going to do in terms of interest rates and money policy. So we'll have to watch if we can get that equity futures market back through the 34,000 level. That opens up the door again to continue to see some follow through recovery. But today it just looks like a consolidation at the top of the range, again down 470 points, but still a consolidation day overall.
John, let's talk livestock today. And, that the hog market, it was doing good there. And then late just kind of fell back and faded. It wasn't huge losses, but I'm a little concerned to see that here. I thought maybe we'd have a good day today in hogs, just the tone that we saw all day long. What are your thoughts in this hog market as we start the week?
We saw a little bit of stability try to kick in here for that hog market today. Fell off those gains. We're consolidating on the bottom end of this. So you go look at that April contract, 20-day moving average is sitting right below us here at this 103 level. Still got a little bit of a premium to that cash market. So that's some of the reason maybe we just can't get things turned around. But let's go look at those fundamentals. Cash index a little bit higher today. Carcasses at midday up $8. That tells us that there's some still demand out there. I'd watch the next day or so, see if we get ourselves a true bottoming signal. Maybe we have another day, we have just a hard sell off to start the day and we snap it back around. That again might be just saying we're at the point that maybe we took this too far going to 112 on April, but maybe trade around 103, 105 is probably where we should be because that cash market continues to tighten up the gap a little bit. So that's encouraging there. Summer months, again, we still got a lot of questions out there. The hog numbers aren't there. Slaughter's down about 7% from last year. Now, that's going to carry into the spring months. The demand's good. Again, with the competing meats also still being high priced, keeps the buyers active in the pork market. So still like the market, but obviously maybe we shot our target a little too far in that first run. Now we're trying to find where that floor is. And again, from there, we probably start working a range and building it until we get some news one way or another.
Cattle market, feeder cattle, I'm assuming sharply lower today with the high feed prices, maybe some of the lower equity trade as well feeding in there. Live cattle also mostly lower. What's your thoughts with this cattle market as we start this week?
I haven't liked the way the April cattle and the live cattle markets have looked here. So we'll have to see. Now we're at the bottom of the trading range, running a trend line underneath these lows going back to November, kind of builds a little bit of a floor here. So we'll have to watch that. We do still have the 200-day moving average down another couple dollars on that April contract. I think cash trade will be a big key this week. We're still seeing some pretty decent bids out there. Retail values, even though they were down about $10 in choice carcasses last week, are still trading historically high. So there's still some value that the packers can keep some bid in the cash market. So I think this week could be a pretty big key. Even today we did rally off the low by about $1.25. So we'll have to see if that can kind of hold. Do we get some follow through? But not like in some of these closes that maybe we get one more hard test to the downside, finishing out that head and shoulders pattern that we put together on the top of this April chart. Again, it's still going to come down to the fundamentals. Retail values are quiet today. What's cash going to give us this week? We did, basically steady last week. Does it stay there? Does it climb? Does it soften? We'll have to kind of see how the market wants to play out. Again, yeah, you're correct on feeders. Just the direct negative reflection of the corn market. When you're limit up in corn, feeders are down $4 at one time. So it's actually nice to see them pull off those lows. Maybe we're getting a little bit undervalued yet on these feeders, given the numbers that are out there that we saw in the cattle on feed report this week. We're now trading almost $14 off the high at the low today. So maybe it's a spot we can turn this thing around again. Got some trend line support underneath this market here. So we'll just have to really watch the next couple of days. But it might take a little bit here. Obviously we need to see the grain markets just get itself into a regular trading pattern before the traders feel comfortable getting back into the feeders and the live cattle market.
Yeah, that cattle on feed report, I was going to say, looked like everything came in pretty much as expected. So it really wasn't a big market mover for us here today. John, how about the dairy markets? What are you seeing there as we get Monday's trade wrapped up?
We got a little bump back in cheese prices today. Still feels like we got a bit of a double top on that March chart at the 23 window. A little bit of a negative day there on Friday. Really couldn't get any gas going today, even with the higher cheese prices. So it feels like we got a little bit more downside here. Maybe possibly bringing that March contract more in line with February. Trading at $20.92 on the Feb. March at 22. It's a pretty big spread there. So it wouldn't shock me. We see some breakdown, especially if the cheese trade were to turn a little bit more negative. I'm kind of targeting maybe a pullback down to the 21.25 area, and then maybe we get some footing again. That'll lead the rest of those contracts a little bit lower. So, milk production's down. Milk production's down globally at the same time. Demand continues to stay good. So I'm not thinking we're going to be rolling out off the table here anytime soon. But again, we're kind of looks like we got a bit of a top end. So now maybe we go back and find where the bottom is. And then that gives us a range that we'll deal with here for the next few weeks.
John, floor is yours. Before we run out of time, any final thoughts you have for us?
Again, basically just stay patient, stay disciplined. These are hard markets to gauge. If you want to be in, you got to be willing to take the risks on here. And at the same time too, if you want to get in these markets, if you want to get a put bought, if you want to get a call bought, you can't really get cute saying I want to pick it up for a penny less than what it's trading and let that order work, because this market might move so fast. I had a customer wanting to pick up something the other day. We thought maybe we get another penny or two break for him, and market turned around and hasn't seen that option since. You just got to step in, pay a little extra to get yourself a position, because this market can move so fast. I think I said it on Thursday. The cost of doing nothing or the cost of doing something will definitely, even though might be a little more elevated, will outweigh the cost of doing nothing and watching this market go tumbling like we saw, or taking off the other direction.
Well, John, if producers need some advice, I know they can reach out to you and the Total Farm marketing team very easily. How can they get a hold of you?
Sure, love chat with them anytime. Give me a call, 800-334-9779. Shoot me an email, johnh@totalfarmmarketing.com. Or again, don't forget about that website, totalfarmmarketing.com. A lot of great information there for producers. These are volatile times. Don't be afraid to pick up the phone or shoot an email and ask a question, just to see what's out there, what's available to you, because you got to basically have every tool in the tool shed or tool case here, going into these types of markets.
John, appreciate the time, the insight as always, sir. Have a great week. We'll talk to you next week.
Sounds awesome. Have a good week, everybody.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk. Find us online, markettalkag.com. It's been the Monday, February 28th edition of the show. I'm Jesse Allen. Have a great afternoon.